right, and we are live here with WPAT on our New York session. Okay, let's quickly actually jump onto some of the important stuff that has happened so far for our Asian session and also the London session. Obviously, as you know, England already has a new prime minister. Okay, has a new prime minister. And obviously there were some talks on how they will actually be attacking this inflation that's actually soaring in the UK. All right, so the plans are basically to make sure there are no tax cuts first, obviously, okay? Then on the other hand, in England, they're basically looking into some very major changes in the financial sector or in the economy to try to make sure that the inflation is not actually causing a huge impact. Now, the whole goal is to actually try to make sure that the banks can actually cash in on some more money. Okay, so what's happening with the Bank of England? Bank of England is actually the first bank, or should I say, it's not the first bank, but it should be the first large institution or large bank that is actually selling off their reserve or stimulus reserve for their bonds. Okay? Now, this is actually the first banks that are doing that. There's no banks that have done that for now, okay, in this inflational time frame. Okay? All right. So before we actually move on to more news about, what has happened in England, okay, I think we should actually take a look at what is going to happen in half hour first, okay? Now, the economic calendar is in front of us right now. What's happening in half hour? The GDP for Canada is actually going to be announced month over month, okay, for August, okay? And also, very importantly, the personal consumption expenditure, okay? The PCE price index for the US is actually going to be announced for September, okay? So, anyways, just a heads up, okay? Be ready, okay, in about half hour's time, okay? Because then you guys will actually be jumping in on your charts and seeing if these numbers will actually cause some major impact, okay? All right, let's go back to story time. So, as I was saying, Bank of England is the first bank that's selling off its bonds, totally doing the opposite of what the Bank of Japan is doing, right? Bank of Japan is trying to create the sense that let's actually purchase our bonds back, right? Because this is totally worth it, so we're going to buy them all back. Well, I guess they're trying to create more confidence, right, in the market. But you know what? Every single country or every single economic entity leaders are actually trying to make sure that rates are getting higher and higher to combat inflation so that people stop using money, for luxury goods and stuff. But Bank of Japan, or should I say Japan, has other thoughts. They're probably one of the only countries that are very dovish in this moment. So, hey, kudos to Japan. I mean, they're trying to create something new in a market trend that's actually, where the masses are trying to do totally the opposite of what Japan is doing. And you know what? As they say in the financial world, don't always believe whatever you read. Okay, actually, that being said, I do have to actually state a few things, okay? Disclaimer here, WPAT live stream is actually diving into the Forex industry, okay? Now, Forex is traded on margin, and Forex and derivatives are actually high-risk products, okay? Whatever we're sharing over here is purely for entertainment purposes and also educational purposes only, okay? In any way or there is no way, or it's not in any way or form financial advice with whatever we're saying over here, okay? Because if you need financial advice, please go seek the experts for it. All right, so carrying on, okay? Basically, Bank of Japan is doing exactly what the schools have always been teaching us, right? Don't always follow the masses. But hey, we don't know what's going to happen and who's going to prevail, okay? So anyways, moving on. rate rises, okay, rate hikes. As we already know, for the U.S., rate hikes are expected, but more of a consensus is actually that there will be putting a break a little bit, to slow down the rate hikes. They may not actually go all the way up on the points. They may actually just cut it in half based on the hikes that they will be expecting to do, okay? But actually in England, okay, they are actually gonna be making a rate hike on Thursday next week, okay? It's actually one of the highest rate hikes possibly for the country, okay? All right, now most people are actually eyeing in on energy. So ExxonMobil or Mobil, okay? They have actually exceeded their expectations on their earnings. So kudos to you, okay? And also on natural gas, natural gas, Chevron is also doing very well. Basically, their earnings are exceeding that of tech companies. Okay, the big tech companies are not doing as well as natural gas and energy. That's quite interesting. All right, well, it seems like the whole world is only eyeing in more on the big techs. Okay, my personal opinion, right? I think techs are the thing for the for our major direction on the economy. Is that a right thing to look at? No, I don't think so. Okay, we should look at things that are more prominent, right? So actually, we should look at oil, right? We should look at natural gas. We should look at gold. Okay, and for all of you crypto users out there, we should look at Bitcoin, right? Because these are a few things that will literally give us the direct indication whether the economy is actually very strong or if we are actually entering into a recession, okay? Because if there's more people holding on to gold, then we should worry, okay? Although I'm sure that there's a lot of people that wish that gold can actually spike up a little bit, okay? All right. Just some more entertaining news since you guys all love tech or big tech companies. Let's talk about Tesla. Okay, remember the Cybertruck, right? The Cybertruck, I'm not even sure if it's actually in mass production yet because, when it was announced, it didn't have that great of an appeal, right? Elon Musk sort of destroyed its bulletproof glass. Anyway, Cybertruck has a different little brother for kids, okay? And it is called the Cyber Quad, Tesla's Cyber Quad. And it's an ATV for children or for kids, okay? Now, do look forward to that, It'll be very interesting. The Cybertruck was never really fully produced. Maybe they can make that miniature version, the Cyber Quad ATV for people to actually utilize, maybe to go to the beach and have some fun. Unfortunately, that did not pass safety. So I hope the Cyber Quad will be way better than that Cybertruck. At least there's no glasses to break this time. All right, so enough with the news. I think we should actually jump onto our economic calendar. As I said, that's happening in about 15 minutes time, okay? GDP for Canada is going to be announcing its data, and in the US, PCE data is going to be announced. So personal income and personal expenditure, we should actually take a look at that, okay? Obviously, usually the consumer or consumption expenditure or personal expenditure, okay, will actually go hand in hand with personal income. So let's quickly take a look at April to August and see what it has happened. So over here, based on the BEA data, right, basically personal income has increased, okay, 0.3%. Actually has been increasing month after month, okay? Now, obviously, I'm sure that this increase will actually include a lot, not just from compensations and whatnot, but also from government grants and so forth are also considered in the total amount of personal income, okay? Now, as income increases, obviously expenditure increases. But unfortunately, right now, also the inflation's there. So obviously, everyone's actually forced to spend more on goods and services, but they get less, right? But then you see the funny thing is when you look at the numbers, it looks good because people are spending more, people are earning more, therefore the economy is doing well. Okay? That's the psychology of things. Or should I say that's the theory of things. Okay? So basically, let's quickly take a look. Okay, personal income, basically current dollar increase of 0.3, and then May is 0.6 all the way to June, and then July and August both at 0.3. Okay, and then personal income expenditure, basically we're looking at basically increase. Okay, we're looking at August, it increased to 0.4. All right. So overall, the price indexes or indices, okay, we should take a look at that, right? It's actually doing pretty decent. It's not dropping per se, okay? So obviously the value of the currency is getting higher, and it seems like expenditure is quite controlled. So hey, you know, this data will probably make sure that we're not in recession. All right. Now, moving on, apart from the PCE and personal income, okay, basically the consumer sentiment from the Michigan reports are going to be announced today as well, okay, with basically the forecast of 59.8, okay, with the previous data release of 58.6, okay. Now, this is a consumer sentiment, and I believe, based on looking at how the stocks are going, people may not feel all that confident, okay? But obviously, if the forecast does match or it exceeds, then obviously we're good to go. The US dollar will get stronger. And that's what everyone hopes for, right? All right. Any other news that's happening for today? Yes, there is. Okay, basically, oil rig counts will actually be announced later in the afternoon for you guys in North America. Okay, I think that's something that we actually take a look at because this will actually directly impact our oil prices. Will it impact big time? No, not really. Okay, but will it give us a good overview of basically how the U.S. is counteracting to the Saudi Arabians' limitation on production? Possibly, yes. Okay, we will. All right, let's jump on in to the most exciting things. We are going to look at basically the market, and we're going to quickly go over some analysis. Alrighty. So right over here, we're going to first kick off our USD-CAD pair. Okay, the US dollar to the Canadian dollar for the North American market. Let's quickly take a look. See what we see on the technical analysis side of things. Okay, already. So on D1, we've already seen basically the divergence. Okay, oops, sorry. Let's draw this out for you guys. Someone has changed the settings here. And I will make this a bit thicker so everyone is in line with each other. Done. Okay. All right, you see, that's a divergence that has occurred, and this divergence is actually respecting itself. Okay, so overall, we're looking at prices have possibly peaked. Okay, with the divergence that has occurred over here, it is basically an indication of a potential reversal. Okay, and of course, the market did respect it, and it did go bearish for a couple of days, actually a week or so. All right, so let's drop it down to H4 and take a look at a closer view of what may happen soon. All right, so over here we do see there is some confusion here. Now, obviously, this is actually bullish engulfing. Okay, most likely it will be respected. Okay, but how far will the bulls go? We're not sure. Okay, I do not believe that the buyer momentum will be that high over here for now. Okay, because we are literally stuck within this range, okay, in this range. So if we're gonna go bull, I do not believe that it's gonna go all that strong up to the 1.38 zone. Okay, if anything, we should actually keep an eye on the moving average, okay, on the midterm moving average, and utilize this moving average MA line of 60 as our resistance point. Okay, only when prices actually go above our moving average 60 line, then we will be expecting the prices to go to 1.38. Okay, which most likely would happen, if anything, in about 2 weeks time. Alrighty, so let's drop it down to H1 and let's take a look if we see any indications of potential entry points. Alrighty, so dropping it down to H1, we're looking at ranging market. Okay, this is a peak of the range already. Okay, peak of the range, okay, at 1.36, right? There's a lot more sellers coming on board. I have to say, it's not sellers, it's actually just buyers that are actually just exiting the market, most likely. Okay, will it actually break above? Not for now. I do believe that the market would actually go lower a little bit. Okay, so USD CAD should actually drop in value. It would be a little bit more on the bearish side of things. Okay, and then it will actually then go overall on the bullish side, as you see over here. Okay, the major trend we're looking at is actually quite bear. Okay, all right, so is there any potential entry points? Not really. Okay, we should just follow the trend. Next pair, USD JPY. Let's take a look at D1. Okay, D1. Basically, we have seen. Let's quickly take a look. All right, so for D1, we see a very clear bearish engulfing. Okay, and it is actually respecting. Obviously, we do see this morning star that has occurred. Okay, I believe this is what we did yesterday, right? We saw something like this, and we are obviously on a buy order. Okay, now so far, if it does respect the candlestick analysis, it should go up. We've actually set our take profit at the resistance point, and let's see how good it fares. All right, dropping it down to H4. Let's quickly take a look. H4, we do see a hammer. Hammers are good indications of reversal points. Okay, they're way better indications, especially if the wick is very long and if this top wick nearly does not exist. Okay, the hammer is very prominent and it's respecting. Moreover, you get a bearish, bullish engulfing over here, so that's a good sign for the bulls. All right, so oversold. It's respecting it. That's quite good. All right, cool. And RSI is above 50. Okay, although there's a lot of probably buyers right now that are concerned and maybe exiting some trades. Okay, but overall, the moving average for 20 or the short MA line is prices are all above it. So there may be some confidence that there will be more buys on the USD JPY, right? Economically or based on the news, the interference from the Bank of Japan is quite limiting. Okay, and like I said, they are one of the few country or the only country right now that's quite dovish. Okay, while most of the rest of the world is actually just following suit with increasing rates. Okay, hiking rates like crazy. Hopefully it combats inflation, so less people utilize more, less money. Okay, but hey, I suppose the masses are winning right now. Okay, all right, so we will stick with the buy order right now as it seems quite prominent, even via the technical analysis. All right, our next pair, Euro USD. I believe this is something that's very prominent. A lot of people are trading this. Okay, we already mentioned today in the in the London session that we do have this tweezer top. Tweezer tops are indications that there may be a seller power. Okay, so the prices will drop down lower, as we are seeing right now. The prices are more on the bearish side of things. Okay, but remember, overall trend, it's still quite bullish. Okay, and over here you see this is actually an ascending triangle as well. So if prices drop down over here to our trend line, the chances of it actually bouncing back up is quite high. Okay, but if the economy in Europe is still very uncertain and unstable, then I do believe that the US dollar will prevail, okay? Despite the fact of how the stock markets are acting up right now, the US dollar is still considered quite strong. All right. Well, thank you guys. Oh, sorry. We should drop down to H4. I didn't finish my analysis. Okay, so for our analysis, let's quickly take a look. There is actually a bearish engulfing, okay, that's occurring. But obviously the MA line 60, it has crossed above our MA line 200. So there could be a chance that this is just a pullback and the prices will continue to go up a little bit more. Okay. All right. And stochastics are showing that this trend is actually not as strong. Okay. And moreover, the lines have actually crossed. So based on visuals, we may have a little bit of a spike upwards on the prices. Okay. But overall, it does seem like it may be losing some traction for now. H1. Let's quickly take a look at H1. Currently trading at the low RSI levels. Okay. It may actually reach down to the oversold section, and that's when it may start spiking up, because let's quickly take a look. Basically the short moving average, it has crossed below, okay, indication of a reversal, okay, but what we call this is actually called a pullback. We can't call that a reversal, okay, and then that's when the prices will actually soar up after this oversold section. All right, so if you were to ask me what type of indications we see over here, okay, we actually do see potential for a bullish trend on the Euro USD. And where will we have our entry points and exits? Well, let's quickly take a look. Oh, sorry. Alrighty. So you see it is the same ascending triangle, okay, so it may actually just come back down and then it's going to bounce back up, potentially reaching at 1.008. Okay, all right, so for now obviously the RSI is still below 50, so it is still on its pullback range right now. So after this, if we do see the RSI start picking up in value, then that's when we know that the trend will continue. Okay? All right. Well, thank you guys for staying, for tuning in today for our New York session. We will see you next week on our London session with WPAT. Thanks.